Thank you, Thomas. Good afternoon from Istanbul, ladies and gentlemen. I'll start my presentation with steel production process breakdown in 2020. 73.2% of world steel production came out of blast furnaces, while 26.3% came from electric arc furnaces. On the table on the right, you may see the regional breakdown of production processes. With the Chinese steel industry's ongoing conversion towards scrap-based production, in other words, electric arc furnace production, these figures are expected to change in the favor of electric arc furnace production in the coming years. Global scrap trade in 2020. The 100.6 million tons of global scrap trade in 2019 fell to 99.3 million tons in 2020 due to the 0.9 decline in global steel production caused by the pandemic. This includes the scrap trading between European countries too. As you already know, China is the largest consumer of scrap for years. In line with the production increase by 5.2% in 2020, its scrap consumption has increased by 2%. Among the largest consumers of scrap, Turkey was another country that has increased its scrap consumption by 7.8% in line with steel production in 2020. Russia, however, Russia's scrap consumption declined despite the increase in crude steel production. The European Union and the US are the largest exporters of scrap in the world. However, nowadays, we are experiencing shortages in certain grades. Prime scrap supply has decreased considerably due to the contraction in automotive industry arising from the global semiconductor crisis. The premium of prime scrap has increased up to $120 in the US. This causes mills to change their product mix towards obsolete grades. As a result, we have seen sharp increases both in the US and EU in June trading. The shredded premium in the global market is way from its previous levels at $5. This chart shows European scrap export destinations. Turkey, world's largest importer of scrap, has the biggest share in European scrap exports. 8.2 million of the total 22.6 million scrap exported by the EU came from the UK last year. Taking this into account, the EU is not expected to sustain its position as world's largest scrap exporter after Brexit. US exported 16.8 million tons of scrap in 2020. Turkey was again the largest buyer with 4 million tons, followed by Mexico with 2 million tons. Japanese ferrous scrap export jumped 22.6% in 2020 to 9.3 million tons. Domestic consumption fell as steelmakers cut production in response to COVID-19. Japanese steel output is recovering and domestic demand for PNS is heating up, while Chinese demand for Japanese scrap is also picking up. Both countries' strong demand for HS grade is leaving Asian scrap markets tight. Coming to major scrap importers, we see a significant increase in Turkey's scrap imports in 2020. This increase is the reflection of higher steel production and lower domestic scrap generation in Turkey. Domestic scrap's share fell to 23% in 2020 from 32.6% in 2019. Turkey imported 22.4 million tons of scrap in 2020. The US was the largest supplier of scrap for Turkey with 4.3 million tons. The Netherlands followed with 3.1 million tons. Meanwhile, Turkey's 4-month scrap imports in 2021 appeared at 8.8 million tons, up 26% on year. This chart shows How China's scrap use grew in years. With the Chinese industry's ongoing conversion towards scrap-based production, we will see higher scrap use in China in the coming years. And now I'd like to share Kallanish Asia team's forecast on this. China's scrap use is expected to increase steadily in the coming years to approach 300 million tons in 2025, in line with the increase in electric arc furnace production, which is expected to reach 170 million tons in 2025 from 94 million tons in 2020. China's electric arc furnace capacity, meanwhile, is expected to reach around 240 million tons in 2025 from 180 million tons in 2020. Blast furnaces scrap consumption may remain the largest source of demand in the coming years. However, growth in demand will be driven by growing electric arc furnace capacity and utilization. As China is in the global seaborne scrap market now, I'd like to share some brief information about Chinese scrap market. China has been mainly scrap importer in the past 20 years and banned scrap imports as of 2019 until this year. In 2009, China imported 13.7 million tons of scrap. Top 3 suppliers have been East Asia, mostly Japan, North America, US West Coast, and CIS and Central Asia. After China allowed scrap imports in 2021, the volume of the imports at 55,000 tons in the first quarter has remained well below expectations due to the country's unfamiliar import specification requirements. In April, however, imports soared to 76,000 tons and are expected to further increase in the coming months due to China's policy shift, which I will get into details in the following slides. On the left, you may see how scrap prices trended in Turkey since October 2020. Global economies have partly recovered from slump in the first half of 2020, and gradual increases in manufacturing activities raised steel consumption and steel prices, as well as scrap prices. Now, I'd like to go into details about the factors that have affected this trend and may have affect the prices in the near term. I want to start with increasing scrap export bans. Russia has taxed ferrous scrap exports at minimum 45 euros or 5%, whichever is higher, during a period of 180 days starting from February. Malaysia has imposed a 15% export duty on ferrous scrap effective from March 25, 2021. This may not be considered as a big deal because Malaysia's scrap exports totaled only 455,000 tons during the full year 2020. But we have to keep in mind that Malaysia was exporting mostly busheling material in containers. This has become more important nowadays as there is a serious global shortage in prime scrap recently. The Eurasian Economic Union has published a draft board decision on the inclusion of ferrous scrap in the list of goods for which a ban on export exists outside the member states. On 15 June, the Union's Commission will hold a board meeting to make a decision on the possible ban from 15 July 2021 to 15 January 2022. Discussion of the project will last until 21st of June. However, the document says the restriction does not apply to transit traffic. Meanwhile, Russia has not yet introduced a ban on the export of ferrous scrap, complete ban on the export of ferrous scrap, limiting itself to increase the minimum fiscal value of ferrous scrap export duty from the existing 45 euros to 70 euros. The existing level is set to expire in late July. The European Commission is considering changes to European waste shipment regulations that could prove to be tremendous importance and potentially highly damaging to ferrous scrap export flows. One of the priorities established for the revision of the regulations is to restrict exports of materials designated as waste, including many of the high specification materials produced by the recycling industry. And some global highlights in chronological order that had and might have impact on scrap prices. China's return to the seaborne scrap market after 2 years of absence has raised the concerns regarding higher scrap prices in early January. However, China's scrap imports have remained limited with 55,000 tons in the first quarter. China removed export tax rebate on certain products as of May 2021, leading scrap and finished steel prices to soar due to strong demand, specifically in China's major export destinations, Asia and Latin America. The US has released the highest consumer inflation since the 2008 financial crisis, causing market participants to worry about excessive inflation and early arrival of interest rate hikes. The tightening of China's monetary policy is meanwhile developing faster than expectations. In mid-May, China's Prime Minister said it would track changes in markets at home and abroad, and that the excessive rise of commodity prices needs to be effectively dealt with. This prompted fears of measures to reduce commodity prices, and both futures and steel prices recorded sharp declines in May, causing a caution in the global market. Chinese prices continue to fluctuate since then. China's policy shift is expected to imply major repercussions for global steel scrap flows. Objectives enshrined in China's 14th five-year plan include cutting domestic crude steel production capacity and boosting the use of scrap-intensive electric arc furnaces over the more traditional blast furnace route. China's policy shift aimed at reducing carbon emissions implies reducing its reliance on iron ore and increasing its consumption of scrap and billet imports. China is expected to impose tax for hot-rolled products, while some market players expect a tax at 11% on HRC. Something a new tax might cover other hot-rolled products too, like rebar and wire rod. Finally, we expect current issues with container shipments to remain until the end of the year. Ongoing insufficient container production leads to a shortfall of several thousand containers. This will most probably result with more challenging times for containerized scrap business. This was the end of my presentation. Thank you for listening.